Well, U.S. consumers are feeling a little pessimistic. Consumer confidence fell more than forecast in February, with Americans growing more concerned about the U.S. economy's direction. Consumer sentiment is closely watched for indications about how it will impact consumer spending, which of course accounts for 70% of GDP. Now, we asked a few New Yorkers how they're feeling about the economy.
I'm surprised they were lower, really. I'll tell you the truth, everywhere you go, it seemed like more people in restaurants, more people spending money. At least in my own experience, I could see it.
I have confidence in it. I think that we are past the worst and that we are moving in a good direction, maybe very slowly. And as with all economies, they go up, they go down.
Prices in the city are very high. And so to have a nice quality of life, it's not easy to live in the city, you know.
I feel that the higher paying jobs is not there. The wage growth in higher paying jobs is certainly not there. People are working more, people are not as unemployed, and I think there's less people, at least in the financial services, looking, but the wage growth is not there.
The conference board says that its confidence index dipped to 78.1 this month, down from 79.4 in January. And to put that data into perspective, we're now joined by Lynn Franco, economist at the conference board. Lynn, good to have you back again.
Good to be back.
Thanks for joining us. So, 79.4, what does that mean? Put that in perspective.
It's still a weak reading. I mean, we've got to go back almost 7 years before we can see confidence readings of 90 or 100, but well above where we were following the Lehman collapse, which was in the 20s.
So we're making progress, but Americans seem to be a little pessimistic again.
Well, I think what we're seeing here is we've had back-to-back weak labor market reports, and I think that's sort of dampened consumers' expectations. However, they tell us that current conditions continue to improve, so there is underlying strength in the economy.
So it's not necessarily that consumers think we're headed for a harder time, but more that they don't feel that the economy is gaining much momentum?
Absolutely. I think they're a little hesitant to say that we're going to gain momentum, but we're still on track and we're much better than we were a year ago.
Now, one of the things in the report mentioned that fewer Americans projected business conditions would improve over the next 6 months, which made them a little nervous about the outlook for jobs. What's impacting the negativity or pessimism over business conditions?
I think just the overall fact that a lot of the momentum that we saw in Q3 and Q4 we don't feel is going to carry over into Q1. We don't expect the economy to derail, but we do expect a little bit of a deceleration, and I think expectation...
Is Obamacare a factor here in terms of employers?
No, I mean, the key here is going to be employment. It always has been with consumer confidence.
But would employers be less willing to hire people because of, say, Obamacare mandates or perhaps this new discussion about minimum wage?
Well, costs obviously are always a concern with hiring. But even with our CEO confidence, we've seen a rebound. So it's just a matter of getting sort of back on track. And we know the weather has had somewhat of an impact.
The weather. Everybody's blaming the weather for everything. Does that really impact consumer confidence?
Not confidence, but I think overall growth, because consumer spending has definitely been hit. I mean, we've spent more time sort of shoveling out than we have shopping over these last few months.
A lot of online shopping, though. Weather is conducive to online shopping.
True, but delivery has been impacted. So I think, you know, we're going to see a little bit weaker growth in Q1, but that doesn't mean that the economy is falling off track.
Let's focus a little bit about this whole minimum wage package. We just saw Karina Huber report on that. The president wants to raise it to $10. What impact would that have on consumer confidence?
Well, that's going to have the greatest impact on consumers sort of at the lower end. So it would increase their discretionary spending capabilities and hopefully boost spending a little bit. But I don't think that's going to be sort of the make or break in terms of consumer spending.
Now, one of the bright spots for Americans has been the recovery in the housing market. It's still on track, but we're seeing that rate of acceleration decline somewhat. What's your outlook there?
The same. We see 2013 having shaped up as a much stronger year than 2014. But again, we do expect the housing market and demand to continue. And I think we'll see a little bit of a pickup in the spring as conditions get better.
Well, the Fed said that they were positive about the overall economic picture and so began their tapering program. Is that making its way down to consumers yet?
I don't think so. I mean, I think what we're seeing in terms of what consumers are telling us is that the economy is still strong. Underlying strength is there. It's just the sort of expectations because of the fluctuation that we've had in some of the data. But I think we're sort of on the right track and will continue to expand.
Do you think that the Fed will continue with its tapering program?
Absolutely. There's no reason to sort of pull back at this time.
Even with the volatility in the markets and perhaps the jobs numbers not being as robust?
Well, I think they're closely, obviously, monitoring the situation, but it's a process that's begun and it's going to continue to unfold.
And with the housing market, so you maintain that the Fed is going to maintain the $10 billion a month tapering schedule?
Well, they're going to continue tapering. The exact amount remains to be seen, but there's nothing really coming out of this report or some of the other reports that we're seeing that would suddenly call for a pullback.
Okay, thank you for your insight. As always, Lynn Franco, economist at the Conference Board.